This week, I want to discuss SoFi and outline expectations as we move forward.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert: this is not a financial advice video. As we approach the start of the week, particularly Monday through Wednesday, the market is expected to be driven largely by technical factors rather than major data points. While a few Fed speakers will present, their topics don't seem likely to cause significant market shifts. The focus is more on Thursday and Friday, when key data like initial jobless claims, GDP, and PCE will be released. These reports have the potential to influence the broader market significantly, especially regarding interest rate decisions. Currently, the market anticipates a 25 basis point rate cut at the upcoming September 18th meeting, regardless of the data. However, the possibility of a 50 basis point cut is still debated, hinging on how this week's data unfolds. The November 7th meeting also looms large, with a 50 basis point cut expected, potentially bringing the total to 75 basis points between the two meetings. This scenario is seen as favorable by many. The market's appetite for risk seems to be growing, as evidenced by the Fear and Greed Index, which is now moving toward the greed side. This shift explains why some stocks have surged without any apparent news. Interestingly, SoFi could benefit from this sentiment since a significant portion of its free float, about 17.07%, is currently being shorted, equating to around 178.7 million shares. Leading into SoFi's recent earnings, I expected short interest to decrease to around 15%, and it did, though it remains relatively high. As risk appetite increases, some short sellers might reduce their positions, which could positively impact SoFi's stock. Options activity is another factor that could support SoFi. The stock recently closed at $7.50, putting all options at that strike and below in the money. This setup, similar to last week, might lead to an early week bump in SoFi's stock price, though perhaps not as strong as before, given the recent market gains. The stock has some technical challenges, with a wide gap between $7.46 as support and $7.98 as resistance. SoFi needs to show strength early in the week to attempt to reach the $8 mark, ideally supported by institutional buying and broader market momentum. While no specific events like conferences or fireside chats are planned for SoFi this week, the technical indicators suggest that the stock wants to move higher, though it might need a catalyst to do so. Despite a solid performance recently, SoFi has lagged behind the broader market, which has been frustrating for some investors. Over the past year, the S&P 500 is up 27%, while SoFi remains in the red. However, SoFi's profitability and potential continue to attract interest, though the stock's chart has been less than encouraging. Looking ahead, SoFi needs to maintain its positive momentum, particularly above key resistance levels. On the technical side, the stock is near the upper percentile of its Bollinger Band, and its stochastic indicator suggests it is somewhat overbought. While some consolidation might occur, particularly if this week's data disappoints, SoFi still has a solid foundation. The upcoming GDP and PCE reports could be crucial in determining whether SoFi breaks through the $8 level or pulls back. Retail investors have been active in SoFi, and this week presents a good opportunity for the stock to test the $8 range. If successful, it could move toward $8.43, though this will likely depend on favorable data later in the week, which could also influence the likelihood of a 50 basis point rate cut in September. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.